Today on the Solar Podcast, we're going to break down the Northeast and Mid-Atlantic solar markets with a colleague of ours and an aspirational peer in the podcasting world. Welcome to the Solar Podcast, Benoy Thanjan.
Thanks, Tim. I really enjoy the content. I appreciate you having me on, and I'm impressed with how much content you put out every week. And I know you're extremely passionate about the industry. So I'm really excited to be on. Thank you.
Well, thank you. It's a great pleasure to have you, and I really enjoy your show, the Solar Maverick, and thank you for paving the way. Honestly, right? You got in the game, and you showed me that it's possible. You and Nico and our friends at the Energy Gang. So it's we need so much more content, Benoy, out there in the world, right? To let the world know what's going on in renewable energy, because this is the opportunity of a lifetime. And these opportunities just don't come along very often. And so if you're a young person or a career changer, you want to look at the renewables industry. And speaking of that, tell us and our listeners and viewers, how on earth did you get interested in renewable energy?
Sure. It's been an amazing journey. Now that I look at it, I can't believe I've been 13 years in the renewable energy industry and 10 years in solar, which is like you're a dinosaur in the solar industry, which is pretty funny, just having 10 years of experience, which is pretty hilarious to me. But most of my experience has been in energy. I actually worked at Deloitte and Touche in their energy structured finance group when I was doing my MBA, and then got a full-time job afterwards. And I really wanted to get into renewable energy, sustainability. I was pretty passionate about it. At Deloitte, I was doing pretty much fossil fuels. So I transitioned actually to a private equity fund called Ridgewood Renewable Power, where we analyzed investments in renewable energy projects, and we owned these projects. It wasn't solar, it was actually biomass, landfill gas, hydroelectricity. So I really got a great base on the renewables sector. And then they actually decided to sell the projects. I worked on selling the projects in the portfolio. And then, everyone lost their jobs after that. And then about 10 years ago, I was like, solar is actually going to be the fastest growing renewable resource and just dominating, new installations going forward. And I kind of saw that there's going to be a precipitous decline in the cost of panels, in the as well the efficiency and capacity of the panels. And then it's so much easier to develop a project, a solar project, than say like a wind project. I was involved in developing a landfill gas project. And then I worked at a company called Vanguard Energy Partners, which is an installer in New Jersey in project finance, and Tesla SolarCity, and then my own company 8 years ago. So that's kind of the brief, or maybe not so brief, story of how I got into it.
So you had a winding road to becoming a company owner yourself with Reneu Energy. What was the ideation for Reneu?
Yeah, so I started the company 8 years ago. Both my parents actually are entrepreneurs. My mom's a pediatrician. My dad has like a lighting company that sells light bulbs and fixtures to small businesses and corporations. So since I was maybe 14 or 15, I was like working in their businesses, and I knew I wanted to start something. And then I thought 8 years ago was the perfect time. I've had like maybe at that point 6 or 7 years of experience in energy and renewable energy. It seemed like the solar industry was really about to take off. And then the business was purely focused at that time really on SREC, solar renewable energy credits. If your audience is not familiar, is an incentive that's a tradable commodity that states in the Northeast created to incentivize the development of renewables. And then there was a carve out specifically for solar. It was very big in Massachusetts, New Jersey, Maryland, DC, and Pennsylvania.
So I have a bone to pick.
Yes.
I love SRECs. Okay. We have an SREC driven market here in Illinois. I got into solar in 2016, and unbeknownst, we had FEJA in the wings. FEJA got signed. That's the Future Energy Jobs Act in December of 2016. The program got created in 2017 and then really came online in 2019. And now we're off to the races. We have 3,000 megawatts of solar and wind. 3,000 megawatts of solar, another 1,000 megawatts of wind that's being developed. But it's a boom and a bust, right? And it comes and it goes so quickly. And the community solar market was, there were only RECs for 111 projects. The developers got 800 projects off the ground and quote unquote shovel ready. And here we are now. I'm standing on the precipice of the bust. We have an amazing year. We're doubling year over year of our installations at Continental. We're a commercial industrial solar installer and EPC. But next year it's a scary look down, and I'm casting about now because I'm not going to be developing projects in Illinois perhaps for a couple of years, and that's a bummer. So RECs are a double edge. They do their job, right? They get your attention when you can get $40 a megawatt, $40 a megawatt hour. It sets the market on fire. And you live in New Jersey, and you have a very rich TREC now, and moving into the next phase. But what are your thoughts on this boom and bust?
Yeah. So that's an extremely challenging situation. And I know, so many, for the first REC solicitation in Illinois, I was just surprised how many developers all over the country were going into the Illinois market, how many people actually applied, how many actual projects, got built or got accepted within the program, which I know you know better than me, and how many projects are basically sidelined. And the boom and bust, sorry, Tim, you're going to say, with the boom and bust situation, it's extremely difficult as a developer or installer to build a consistent business in that sort of economic, where you have to wait for another basically solicitation for another.
And now it's actually a barrier to entry. If you're a C&I facility owner and you want to do solar, if you were to energize a project without a REC award, you are not grandfathered into the program. So it actually creates a resistance for C&I owners who might otherwise go, well, yeah, I can wait a couple of years. The RECs are going to come back. It's a wave, basically, because we do a 15-year payout over 5 years. So they're spending the money faster than they accumulate the money. Whoever thought of that was a genius.
That is genius. Yes.
And so that is a problem in and of itself. And it guarantees that you're going to have the boom and the bust. For all intents and purposes, as far as I know, there's no way around that with that 15-year payout over 5 years. But now I can't get anything off the ground really, unless they throw out the REC incentives, which we do have some projects with solar and storage where it still pencils really nicely, and the REC money is icing on the cake, but it wouldn't be a deal breaker if they don't get RECs. And so those projects are still moving slowly through the pipeline. But for the most part, C&I solar is DOA right now. Unfortunately, we have many companies that are learning about solar and kicking the tires until they realize, oh, it's a 15-year payback without RECs. What is the payback in New Jersey without RECs? I'm just curious. For solar.
So it probably is around the same period, like with the new TREC program, which we'll go into. I would say the payback, if the person that owned the system, a commercial industrial building owner, is 2 to 3 years. Without the TREC, I think it's maybe 12 to 13 year payback. I've actually not looked at the analysis without the TREC. The TREC incentive is pretty lucrative. I mean, you're talking about a $60 per megawatt hour. The TREC's at $152 per megawatt hour, wow. fixed for 15 years. So, there's basically developers and installers all over New Jersey trying to develop projects. And I think what you're alluding to is really how the state program is structured. Because in 2012, the SREC market, which is the program before the TREC in New Jersey, that collapsed. So basically it was at maybe, I'm trying to remember, but that's back in 2012, but it was or even earlier than that, I apologize. But it was above 200, 250, 240 per megawatt hour, and then dropped to 65, within like 2 or 3 months. So there was the industry just completely stopped, and a lot of people lost their jobs during that time. Then the state actually passed legislation to increase the RPS, basically the compliance obligation that generators had in that state to fix the oversupply so that prices would go up. So I really think it's about how you structure the program. So then when Massachusetts basically had their SREC program, they basically had an artificial floor at 185 per megawatt hour to make sure that you didn't see the boom and bust cycle that you did in New Jersey. And then basically what's happened in the Northeast, instead of having these tradable commodities, they're more moving to like a fixed incentive like the TREC. And then Massachusetts has the smart incentive, which is more of a feed-in tariff program. So we're seeing basically a move away from the tradable commodity to like a fixed level incentive. And obviously, we're seeing a lot of interest based on that in those markets.
Here in Illinois, it's ratepayers that are paying for the REC money. We have a small fee on our power bill, whether you're an Ameren or ComEd or Mid-American, and it's capped at 2% of the bill. And then it creates a pot of money. So system owners or developers, right, when they build a project, then they can tap into that fund, and that's what funds the SRECs or the cash incentives. What is it that funds SRECs in New Jersey?
So it's the same thing in the utility bill. There's what they call the societal benefit charge. And it's basically a pot of money, essentially like a tax on your utility bill that goes for the renewable energy program goals of that state. And, specifically now to like the TREC program. And the SREC is actually still around. It's just only projects that were grandfathered. So there's, projects like basically it's sunsetted May of this year or April of this year and transition to the TREC incentive, which is, as you mentioned, a transition incentive. And then they're going to have a new incentive, which is going to be similar to the TREC, but lower. So it's not going to be a tradable commodity. It's going to be another fixed level incentive, but we think it's going to be lower than what it currently is right now.
Okay. So let's reflect a little more on Reneu Energy. When you got started, what was your intention and how has that changed? How has the business evolved? Because every business pivots multiple times. I'm sure you have done the same. Tell us about that.
Yeah, it's just been surprising to me how I started the company just to be involved in SRECs. I have before Reneu, I basically started SolarCity, Tesla's SREC trading desk. When SolarCity was basically a California-based company moving to the East Coast, and then even at that private equity fund and Vanguard, I was managing REC. So I have 6 or 7 years of REC experience. I thought that was all that I was going to do, just focus. And we still do actually a lot of REC work. We manage about 12 megawatts of projects that we do SREC management. We help our clients sell their RECs. We actually help an investor as well, where we do research in all the different REC markets and pricing projections. But then, I kind of saw the writing on the wall a few years ago that basically RECs are being phased out. We have to figure out other ways that we could add value to clients. So then we helped investors and developers with sourcing financing for their projects. We kind of know certain of our investor clients, what type of projects that they're looking for. And then we have relationships with developers where we bring those projects over. They're developers who as well ask us to bring financing for their projects. And then we also got involved in the development side. So developing commercial, industrial, utility scale projects, predominantly in the Northeast, New York, New Jersey. And so it's just amazing to see how the model has changed. I mean, we're really focused as a consulting and development company in solar by figuring out how we could add value to someone. And then, so it's just in 8 years, we've pivoted so much. And I think we're going to continue pivoting as I've heard you say, Tim, and we'll all be storage experts eventually. So, I think that's the next sort of, adjustment that we're, working on. And, I think that's another service that we're going to add. So.
Yeah, it's funny because I honestly think that a lot of solar installers and developers don't necessarily even see it yet, that they have to become storage experts, and that's where the puck is going. And while storage is a small slice of the pie today in many markets, the nature of these tipping points, right? We see this with ICE engines and the electric vehicle adoption. New Jersey, John and I reported on that story about New Jersey putting a stake in the ground
Yeah.
on the sunsetting of the internal combustion engine. Literally in the next 5 years, the ICE engine is going to fall off a cliff. But 9.99% of 99.9% of Americans have no clue about this tipping point. That is actually, we're in the midst of it today, right? The technology is growing its way into the market. Tesla's driving that, of course, but others, and the battery industry is now quickly evolving and growing in, and it is the holy grail. That is the most appropriate term for it, right? With renewable energy. And I had a call this morning with NREL, with a group that is focused on hybrid power plants, and that is going to be de rigueur, right? It is going to be our lifeblood as renewable energy professionals, is doing hybrid power plants, whether it's wind, solar, and storage, or solar and storage, or wind and storage, or green hydro and solar. And there's
Yes.
there is going to be a mix. So I'm glad you're amongst us with your interest in storage. How many storage projects? Can you talk about storage at all? Are you directly involved in some storage projects?
So we are looking at some potential solar and storage projects in Massachusetts with the SMART program. They have like an adder for storage, and then within the VETR calculator. So VETR is the value of distributed energy resources that New York has. There's also like a compensation for storage, and we're trying to figure it out still. I wouldn't say we're actively, like, aggressively developing projects. Like, I really believe like in 3 to 5 years, you're going to see huge price decreases, and specifically lithium ion batteries that will change, a lot of the projects will become economical. And I think the challenge too is like just finding an income source where it's basically guaranteed. Like, for example, with SMART and VETR, I know you mentioned, there's a lot in California happening, in Illinois. So we're still trying to figure it out. I think there's a lot of opportunity, and we're just preparing to do that. Also, as you meant, New Jersey is actually supposed to come out with storage incentives as well. So we're looking forward to that, because I think that will be another big opportunity as well. And a lot of our clients, like commercial industrial clients, are asking us, hey, can you put storage as well? And I think right now as like a battery backup, but I think now it's a little bit too early to do that. But
everybody wants a battery until they see the price tag.
Yes, that's so true. And sorry. I can't,
I hate to be the bearer of bad news, and it does pencil sometimes. I give the example of, we have an industrial customer who's going to do a solar and storage project. Solar alone might be a $5 million ROI over 20, 25 years. The solar and storage is a $20 million ROI. And so truly, when it does pencil, storage is transformative. Unfortunately, it's only a fraction of the projects that it really does pencil. The nuances in what's the rate that a customer's paying, the price of energy, et cetera. So, you mentioned storage specific incentives. Can you say any more about the New Jersey market? And please tell us more. I mean, there's such a need for more good information about the VETR program and the SMART program. There are some nuances in Massachusetts now. If you do a solar project of 500 kW or upright, you have to pair it with storage, which is a double edge, I'm sure, but it's a good way to jumpstart a storage market, I would imagine.
Yeah, definitely. I agree with you about that, Tim. I mean, it's a great way for developers to start developing if you're required to do it at 500 kilowatts or more. What I'm hearing from developers who are doing that in Massachusetts is they think it's a waste, because like it really like hurts like the return, because the battery is so expensive. even with that adder, it just doesn't seem to make sense. But obviously, if the whole project meets the solar and storage meets the return expectations of their investor or, you know, the commercial industrial customer, then it makes sense. And then as we're seeing a lot developed in New Jersey because of that TREC program. It's basically a transition incentive that lasts till October. And so everyone's trying to develop projects that were pretty busy, like pricing behind the meter opportunities. And also they have a community solar program, which is the second year solicitation is 150 megawatts that the applications are due February 2nd, 2021. And that all the projects that are awarded will qualify for the TRECs. So we're also seeing a lot of activity like based on that as well. And then New York with the VETR, which I don't know how familiar your audience is, and I don't know how much detail to go into it, but because it's pretty
Lay it on us. Let's hear about VETR.
I didn't know if I was ready to speak about it. So it's a, you know, value of distributed energy resources. It's basically the way New York is compensating you know, distributed energy projects. There's basically 5 different components of it. There's basically like a locational marginal price, LMP, a capacity value. There's basically a REC, which they call E for environmental attribute, which represents, I think, $25 per megawatt hour. And then let me think of the 2 other components. There are LSRV, which is locational system relief value. So basically they're awarding a higher value if you choose an area where the utility says there needs to be an interconnection upgrade. But if you put battery or solar, it will help with not necessarily needing upgrades. And then there's like a demand reduction value, DRV.
Yeah.
And,
So
yeah.
when you describe this, I immediately get it that this is a NYSERDA phenomenon, right?
Yeah.
New York State has a very special entity called NYSERDA. And in Illinois, the equivalent is the Illinois Power Agency, and it's night and day. We're very blessed with a good IPA. We like the IPA, and they're very competent. But NYSERDA is like an R&D institution, right? And they drive research funding for bleeding edge technologies and getting these pilot projects built and integrated and off the ground so that real contractors can provide these real benefits to real customers in small, you know, it's an R&D machine. And it's like no other, really. So if you're a public official out there in the energy space in some other place, look to New York and look to NYSERDA for a great model for what states can do to incentivize bleeding edge and new technologies to come in. And this is across the board, right? From energy efficiency to renewables and beyond. I don't know the full scope of NYSERDA, but it's vast, and it's like a state NREL, right? The National Renewable Energy Laboratory. Now they have this in New York State. I don't know, in New Jersey, what is the entity that you have that moderates renewables?
So it's the New Jersey Office of Clean Energy, and so they work with the Board of Public Utilities to basically come up with the incentive programs and to meet the governor's goal. I think his goal is 100% renewables by 2040, and I think New York has the same goal as well. But you're right, NYSERDA is a great framework for other states to use to model what they want to create in state legislation. You know, NYSERDA actually used a lot of what California did in the beginning to basically create their incentive program, which is the megawatt block incentive, which was similar to what California did before that. So yeah, VETR is extremely complicated. There's a lot of opportunity. There's a lot of community solar being developed. One of our clients is a European developer, and you know, we're working with them to develop a huge, substantial portfolio in northern New York. So we're, you know, very comfortable with these terms. And it's New York and New Jersey are really like one of the probably the extremely hot markets right now to develop projects. There's a lot of activity that's happening.
I've heard from developers from the Southwest who have made attempts at working in New York, that New York is a tough state to break into. And I don't know, I have family who live in Manhattan, and I have family in New Jersey, so I'm, somewhat familiar with the overall culture of those places. But what is it that makes New York a hard place for regional or national EPCs to break into, do you think?
I mean, I think like if you go like obviously to meet with the landowner who's usually like a farmer, or like they always have a preference, and I don't think this is just New York, but someone who's like local to the area. Like if you have like headquarters in New York or that area of where they're located, like let's say in the Hudson Valley, it just seems to make more of they're willing to, because they have to basically trust you, right? They're getting into like
Yeah.
doing a land lease agreement. I could also say too, and I won't mention the company, but a few years ago in the beginning of the community solar program in New York, like it was basically a developer from another state who basically canvassed the whole state and then wasn't really kind of following through. So I think that as well like led to a lot of people being hesitant to work with out of state companies. I think the other thing too is like townships put solar moratoriums, meaning like basically saying you can't develop solar until we kind of figure things out. But
Hmm.
I think you notice that in a lot of states, like the acquisition cost for a customer is a lot easier if you're based in that state than if you're an out of state, especially if you're like on the West Coast and coming into New York. So,
Okay. Yeah.
but I don't know, maybe there could be something else that I don't know.
Yeah. I mean, of course, I think landowners are always going to give preference to a local company if they can. Here in Illinois, that was not an option, generally speaking. Interestingly enough, some of our well-established renewable energy companies didn't go after the community solar market because they were more utility scale or CNI oriented, and community solar is kind of a niche. It's and we have a it's a both and. The Illinois market is across the spectrum. We have residential, commercial, community, and utility solar happening. The utility is just going to go in the ground next year, starting next year. So,
Sure.
but everything else is going to tail off now, including residential, because the rec money is drying up. So, it seems like you have your fingers in many pots. How do you decide where to spend your time and money, though? Because the world is your oyster. Let's face it, renewables are on fire. You're right there in the heartland of one of the best solar markets in New Jersey and New York, and you could probably do nothing but focus on those two markets. But you're also involved in international work, and so yeah, I'm just curious, how do you slice and dice up the world as it comes at you and as you create it?
Yeah, I mean, that's a great question, Tim. I think it's challenging because there's so many opportunities that are coming to us all the time, and it's really just determining which is like the best fit and where we could add the most value. And I would say like we did a lot of international work in the past, but now we're tending to do less internet. We haven't done international. I mean, I guess we do have international clients, but they're doing stuff in the US, so that's different than doing
Mhm.
stuff internationally. But I would say, as well, like during COVID, what we found is that we've been focusing on our existing client base and people who have been referred to us, and as well, mostly like stuff locally, like New York and New Jersey. Because what we found with COVID, it's a lot harder to build relationships through Zoom and other forms of that we found it's better to like work with our existing relationships and contacts. And you're right, like we have to figure out, what's just is going to have the highest return, but add the most value. So, I mean, that's why I try to be very disciplined. I would say like earlier, like maybe, when we first started the company, like there's just so many things that we would say yes to. And now probably most of the times we're saying no because we're really kind of focused on like project development, project financing, but then like there's all these other things that people reach out about. And I would say like with having the podcast too, a lot of people reach out, but it's great because um, there's a whole new network of people that we're meeting, and then there's like a built-in trust because they're used to listening to the podcast as well. So that's been as well like an interesting sort of avenue that I think, especially during COVID, when you're trying to build a business, it's very helpful.
So paint a picture for us. What kind of calls, meaning inbound phone calls to you, are you looking for and are excited about? Understanding that there's a spectrum and there's a continuum, and I don't want you to scare anyone away, but truly, what is it that you're most interested in and excited about?
Yeah, so commercial industrial building owners who are looking to go solar, predominantly in the Northeast. We're looking obviously for larger rooftops where it's like 50,000 square feet or greater. Landowners who own maybe 35 acres or more. Those are ideal, potentially like small utility or community solar projects. And then solar developers who are looking for help with getting financing for a project. Then that's just not the Northeast. We help all over the US, and that those tend to be projects like 500 kilowatts or more. And I would say too, like investors, like I know, like obviously investors, everyone, all the developers are getting called by investors all the time. Obviously we are too, but if I feel like we've talked to mostly everyone, but I'm sure there are people that are missing that we haven't talked to. The other thing too is like, I think the way we add value too is when we're helping developers find an investor for their project, is we're finding like the right investor for that opportunity and what the developer is looking for, which I don't necessarily think that all developers know who the right partner could be, but I know that they're all getting inundated from all the people reaching out to. So
Yeah, as I say to the myriad of people who reach out to me on LinkedIn wanting to invest in solar projects, there's more capital in the market than there are solar opportunities right now in the United States. I don't know if that's true everywhere, but there certainly is here in the US. And that's, it is what it is. It's good for some. It's and I guess what's present for me is that we need more leadership that is going to drive the clean energy transition right. The United States could clearly could make the transition. Okay, we see the Rewiring America report, and things like that. The 90% clean grid by 2035 report, and we have the technology. What we need is more people in positions of power and authority to really rally the troops and drive this wedge deep into the heart of America, and it's such a win-win, as you know, and then there will be more opportunity for those flows of capital. Many of them, like I get approached by things like the Dubai investment fund, and there are these large pools of money that are out there looking for good green opportunities in lucrative spaces like renewables. I don't know. What are your thoughts about that? It is election day, Benoy. We're going to publish this on Thursday, and we might know what the results are, but most likely not, I'm guessing. I think it's going to take a little while for the dust to settle. But what do you think about the United States? Let's step back for a second in terms of, what we could be doing.
Yeah, I mean, I think there's so much that we can be doing from a clean energy front on a national and presidential level. I mean, even an energy policy, there's no national energy policy in the US, which is surprising to me when it's, such a big thing to both our economy, our national security, our independence from other countries. So I mean, I really feel like whoever becomes like, or whatever happens with the election, like we do really need leadership from Washington to really, I think a lot of it's really been on the state level and by companies having goals of 100% renewables. But I really think really like what would really impact the economy in a positive way if we're more strategic about energy strategy, energy investment, and having a national energy policy. Just like I mean, I think what we talked about is like solar is, it's just exciting to see what's happening with solar, and it's going to continue to grow no matter like what happens with the election. But I think in the long run, but I think in the short run, obviously there's going to be, some sort of impact, especially with like the investment tax credit, going down to 10% in 2022, that's going to have a huge impact on the solar industry. I mean, I think as an industry, as a solar roller coaster, as you like to say, Tim, like we, have somehow like during these periods of challenging times have figured out how to do things more efficiently, and everyone's become very creative. But I think it might be challenging in 2022 at 10%. And the other thing too is like, there's less tax equity out there as well, because companies are not performing as well in high net worth individuals, so that could impact it as well. So we'll see. I mean, I think the future's still really bright, but in the short term, if President Trump gets reelected, it could, he probably wouldn't pass like any legislation regarding the ITC versus compared to, Vice President Joe Biden might. So that's just.
Yeah. Yeah. If anybody doesn't know, we have something called the ITC, the investment tax credit, which is currently 26%. It's stepping down to 22%, but it's a very generous incentive for solar energy projects and solar and storage. If you pair storage with solar, you can use the ITC on the storage. And, there's talk of a storage specific incentive at the federal level, but it hasn't really gone anywhere. And it probably would not go anywhere without regime change here in the US. So we'll see. It is interesting times. Let's talk a little more. We just have a few minutes left, Benoy.
Definitely.
And truly, I look forward to having you back, because the New Jersey, New York, Massachusetts markets are a great place for people to study, or places for people to study, because they've been there, done that, and are quite mature markets. Not that California isn't also an important market, it is. But we can learn from you, and of course the Illinois program here was modeled after. It's a hybrid, right? That
Yes.
There were leaders who stepped up to guide the development of FIJA and the establishment of this declining block program. As flawed as it is, it's also probably better than what some of you guys went through in the early days, right? So it's all relative. Yes. And I'm not suggesting that incentivizing energy markets is a simple problem to solve. I honestly would love to see somebody apply a narrow AI to this problem, of how do you create a smooth transition that doesn't have these booms and busts. But what projects are you most excited about and proud of, either looking back or in the present day or looking forward? Benoy, tell us more about what you're up to at Reneu Energy.
Sure. So the project that I'm really excited about is a project that we've been currently developing, and we won the bid for, and it's doing one of the first solar projects with the New York Housing Authority. And we're basically putting solar on 20 rooftops in Manhattan, NYCHA facilities. And it's actually a community solar project. And we're training NYCHA residents to install solar, and actually providing some of the electricity to the LMI, low moderate income community. And then for the bid, we partnered with two minority women, Hispanic-owned business, and one is a current NYCHA resident, and the other was a former NYCHA resident. So it's just an amazing sort of community partnership, public-private. We're hoping that it'll be in service sometime next year. We were awarded the project almost 2 years and 2 months ago. So it's been a long road to get that. And there's also complexities as well with installing projects in Manhattan. And we've been working with NYSERDA on, higher incentives for affordable housing and solar. So I'm really excited about it. It's not in service yet, but hopefully sometime in the second quarter of next year it will be.
And that's going to be rooftop projects that are part of a community solar program. Is that right?
Yes, that's right.
Okay.
So, and then it's also giving income, lease income to NYCHA, the New York Housing Authority. So they
Hmm.
make revenue from it as well. So
Yeah.
it's a community engagement
Yep.
as well project.
And then residents will have an opt-in opportunity, or how does it boil down to individual residents?
Yeah, so residents will have like an opt-in opportunity to buy the electricity. It doesn't necessarily have to be from the NYCHA residents. It could be from any resident in the Con Ed service territory, and they could be LMI customers. We'll also have like some that are not, LMI, and then there's no penalty. Like if after a certain period of time they're not interested, but we think there'll be a lot of demand because it's hard to put solar in Manhattan.
Yes.
And so there's not many, open roof space, shading. There's shading issues and things like that you usually have to deal with. And the cost to build in Manhattan is a lot more expensive.
Yep. Yeah.
To rent a crane.
Until we have cost-effective building integrated, and even with some parts of Manhattan being so dense with high rises, I don't know that even building integrated glass would work. Right? There's just so much shading on those vertical structures. But um, okay, so LMI, community solar. What else is on your horizon that you want our listeners to know about?
Yeah, so we're actively developing community solar in New York, state, like upstate New York, which it's like totally different than obviously the Nitro project. So that's 5 megawatts AC. We're excited, hopefully, to have like a large amount of megawatts. Like I can't disclose, hopefully by next year, or basically the second or third quarter of next year. So if anyone's looking, if they need help with developing projects, we're happy to help. And that, I think those are like the two things, and as well the New Jersey community solar projects that we're hoping to apply for in February that we have under letter of intent. So that's what's been keeping us busy.
What does it take for a developer to get a project into the New Jersey market? In Illinois, you have to have an interconnection agreement and non-ministerial permits, like a special use permit is something we call it here. How difficult is it to get a project into the market, so to speak?
So it's actually a lot simpler than what you have in Illinois. It's really filling out an application. It is then like having the site host basically sign that they've given a letter of intent or a copy of the letter of intent, and then New Jersey has like different preferences as far as how they'll grade the community solar project. So it's actually a lot easier than a project in Illinois to apply for it. But the big thing is like 51% of the offtake has to be LMI to get like a preferential sort of rating with the community solar project in New Jersey. And it's for 150 megawatts.
So won't that program be grossly oversubscribed given the low barrier to entry?
Yeah, it'll be grossly oversupplied. Just to give you an idea, like the first year, which was 75 megawatts, only 17% of the applications got accepted. So there were maybe like 400 to 500 megawatts that applied. I think there's probably going to be more projects as well. There is a year 3 of the program, which they're going to start next year. And then they're going to have a permanent community solar program. But you're right. I have some hesitations about spending a lot of time on that. I mean, we prefer to focus on behind the meter. So if it's a clear behind the meter opportunity, obviously we'll, tell the customer it probably makes sense, and, let them know that there's risk related to getting your project approved. So, but there's some
Okay.
projects that you can't, there's no option because they either have no load or very little load where it makes sense to do a community solar project. And people don't know, like New Jersey doesn't allow solar on farmland. It's brownfield and landfill. So, we've been focused a lot on like carports and rooftop
Okay.
to get the bigger project.
Cool. Well, hey, I want to make a few announcements. It is day 25 of the Solar 500 Challenge. This podcast is brought to you by Continental Energy Solutions. We're bringing you 2 of these interviews every week. If you like the content, please subscribe to the channel. You can find all of these videos at cesnrg.com/videos, with wonderful solar professionals like our interview today with Benoy Thanjan. We're very grateful for your time, Benoy. So please give us a thumbs up. Tell us what you think. Give us your ideas. We'd love your ideas for future guests, and share this content with your friends. That's the most powerful thing. It's not enough to hit the like button, unfortunately. Really sharing and commenting is where it's at in terms of the power of the pen. So please do that for us. And thank you, Benoy Thanjan of Reneu Energy. It's so good to have you on the podcast. I so look forward to having you back.
Thank you, Tim. It was an amazing interview, and I really enjoy your content, and I'm a subscriber, and definitely continue to do your great work. And we need more people like you, and I appreciate you taking that lead.
Well, right back at you, man. Thank you so much. And thanks to all our listeners. Let's grow solar and storage. I'm Tim Montague, your host. Have a great day.